Welcome to Kaiser Watch with John Kaiser. I'm your host, Jim Goddard. John, what's coming up on the show today?
Well, it's the end of May. My KRO Favorites Collection has now been around for 5 months, and we're going to talk about how it's done and what we can hope for later this year.
How has the KRO Favorites Collection done so far this year, and where lie your greatest hopes?
Well, at one point in the beginning of the year, it was up 10.5%. That was in January. Its low was down 19.3% in mid-February. And right now, it's up about 3.9%. This is as of May 30th. And that's quite disappointing. There's only 10 companies in it. They're supposed to be favorites. Gold, meanwhile, is up 13%. And even the TSX Venture Index, which is only about 140 companies, of which two-thirds are resource sector related, it's up 11.2%. So I'm not particularly happy about this performance. However, most of it being down is due to how badly the lithium stocks got clobbered at the beginning part of the year, and they have not really recovered significantly from that. So those three stocks are weighing down the index fairly badly. But in terms of upside, last week I talked about Hercules Silver. They have just started a 20,000 meter drill program, and copper is strong. Westfault Mining Inc. This is my favorite proxy, leveraged proxy to gold, and it's still being priced roughly $1.05 where it started the year at. The market does not believe $2,300 to $2,400 is real. It does not believe we are in the beginning of a secular gold bull market, and it also doesn't really believe that we're into a secular copper bull market. And yes, with the producers, we have seen an upside movement reflecting the price changes for copper and gold. But as far as the juniors are concerned, the public says, no, we don't buy it. We want to see the trend in place for a lot longer. So I think later on this year, we will see that inflection, perhaps even in the summer when we're supposed to be suffering the doldrums, we'll see the junior resource sector wake up. Now, my greatest hopes lie with Solitario Resources Corp., which on April 30th got a decision from the U.S. Forest Service on the FONSI it had issued in early December. A FONSI is a finding of no significant impact. The decision required them to file some additional paperwork with the state and the U.S. Forest Service for the Golden Crest project in South Dakota. They have submitted all this material, and they're just waiting for the state and the Forest Service to sign off on it. They've contracted a drill company to hopefully begin drilling in mid-June, when they could hope all this to be ready. And but the stock stalled. It moved up a bit recently, but it stalled because this means there's another couple of weeks left for the America's anti-mining lobby to file a lawsuit claiming that the U.S. Forest Service is incompetent and negligent in granting this FONSI. Should that happen, then we probably have another 2 months delay while a court looks at the plaintiff's case and makes a probability decision of success. If the probability is low, the court will say, well, you can proceed drilling, go ahead. So that would mean maybe until August. So we've got a couple of weeks of still waiting to find out whether drilling can begin. Once drilling is underway, it will not be stopped. And Golden Crest is this extraordinary project, which I talked about in May 17th, some Kaiser Watch episode to some degree of detail. I think this has the potential to become a cult stock for the younger generations because it is listed on the NYSE AM section, which means Robin Hooders and that can trade it. And I think once drilling is underway, we will see this turn into kind of almost an education platform to teach people how geology works, how discovery works, and of course, it'll have a huge nostalgia aspect because literally this thing starts at surface and may go down 500 meters or deeper. This is perhaps the last great district scale gold system in America sitting at surface unrecognized for over 100 years and now coming into view, and hopefully within a couple of weeks, the drills are turning. Now, I couldn't stand not owning the stock, so I recently bought a position. And I also bought a position in another company that I flagged as a bottom fish in last October. I turned it into a favorite on April 19th after Crescat, and a strategic investor that remains anonymous invested $3.6 million above and beyond the $2.5 million they already had in the treasury. This is PJX Resources, whose primary story is that they may have an actual Sullivan II discovery on their hand, outcropping on the edge of a mountainside, which has been obscured by a much younger dike that prevented past prospectors from seeing this. And in this same project, they also have much younger intrusion-related copper-gold potential. This extra money from Crescat allows them to get a second rig on there and test some of these other targets, which were the main reason that John Keating had the company in the Dewdney Trail area in the first place, because he's of this view that there's a structural architecture in place that was exploited by much younger intrusions than the 1.5 billion year old ones that created the Sullivan deposit. So they'll be going after two targets. But the stock is stalled at the sort of 30-cent level because they are going through the motions of getting a modification for an existing drill permit. And in the UNDRIP nation, until you actually have the permit, it may never get around to drilling. So right now, it's a holding pattern. The stock's cheap. I think once they get going, they have discovery potential on multiple fronts. And this, again, has potential to be an old-fashioned discovery play with newcomers learning how geology works and getting caught into this whole S-curve magic of an exploration play. Now, I talked about Arizona Gold and Silver on April 12th. They have the Philadelphia Gold Project in Arizona, and they've been focused on the Philadelphia vein, which was mined ages ago, and they started a 22-hole drill program in April. They have now finished this program. They're testing some gaps in the vein structure, the Risaca claim that had not been drilled in the past, and we shall start getting the assays coming starting in June, stretching into mid-July, late July, and these could become the basis for an initial resource estimate. But what we're really waiting for with Arizona Gold and Silver is a BLM drill permit. Now, the environmental assessment that the BLM put together, it was posted on March 4th for public comment. That period ended on April 4th. You go to their website and you can see all the documents filed, and it says the BLM response to the comments is pending. I could not find the comments. Somebody who did see them say, well, it's the standard stuff. It doesn't look like the BLM overlooked anything particular. But this permit is important because its claims stake to the east of the Philadelphia vein, and the Philadelphia vein dips to the east, which means they cannot chase it beyond 200, 300 meter down dip depth without stepping onto the BLM land. So they've been limited in delineating the high-grade potential. But on the eastern side is also the Red Hill target, which has potential to be a bulk tonnage open pitable gold system. And once this permit is granted, then the company can mobilize a drill program, raise additional money, and hopefully we'll have some fancy assays from the Risaca drilling on the Philadelphia vein. So this stock could also come alive in the summer. But again, we're waiting for a government agency decision to make this a possibility. Now, a company that I think could reward us anytime, and that I last talked about April 26th, is Colonial Coal International Corp. Now, at the time, I talked about why did this stock suddenly wake and was on the rise, and it's been in this $2.50 to $3 range. And the reason was that David Austin had retained Citibank to basically operate the potential sale of the company. Now, this means working with all potential bidders and negotiating a friendly acquisition. Now, the stock has kind of stalled in the last few weeks, and the reason is that the Indian general election, which runs from April 19th to June 1st, tomorrow, this is a prolonged election process, and the Modi government had instructed the state-owned or partly state-owned steel-making companies, do not enter any material transaction during the election, wait until it's over. And some of the biggest potential bidders on the list to buy out Colonial Coal are state-owned Indian steelmaker companies. So I think things will pick up again. What are the two outcomes? Well, one could be a friendly negotiated deal. We're hoping for something at $5 to $10 per share, could be higher, and these are metallurgical coal assets in northeastern British Columbia. But it's also possible that one of these parties could just look at the field and do a preemptive hostile bid without any negotiated deal, and that would possibly kick off an auction. And I think this company, which I've been following for 4 or 5 years for this potential buyout, I think this could provide some joy for investors this year. Now, Canalaska Uranium, I last talked in detail about it in March 29 after it published results from step-out holes from the Pike discovery hole earlier in the year, which caused me to put it back from bottom fish into favorite status situation. And this past week, they put out finally the geochemical assays for the holes that they drilled. They had previously published radio equivalent assays, EU308. The assays were a little bit lower than the EU308 readings, but the problem is there's missing core or poor core recovery in parts of the intersection. It's at the unconformity where things get messy, but that's also why there is high-grade mineralization there. But they, in essence, confirmed, yes, this is a high-grade MacArthur River scale type of mineralization that we've hit at the unconformity. The next step, of course, is a MacArthur scale in size, and in absolute terms, MacArthur is like only a million tons. It's quite tiny, and with a specific gravity in the 4 to 6 percent. 4 to 6 specific gravity range for something running 4 to 6% U3. Running 10 to 20% U308, it does not have to be volumetrically big. So sometime in June, they will resume drilling with very modest step-outs. All they have is a 2-dimensional fence of 3 holes across this structure. Now they need to step in either direction. One of the benefits of having the geochemical assays is that they are now able to calibrate their probe to do more precise readings in this particular context. So once this gets going, we should be able to see real-time delineation of an ore body. Now, this can go the wrong way, and it could turn out to be a very small, localized deposit. But because of the alteration halo, it can also go in the other direction. So this could also kick Canalaska into S-curve territory later this year. And I do recommend that people listen and watch my backstage interview with Corey Bielik that I did on May 11th during the Metals Investor Forum. He gives a lot of flavor about what it's like to delineate one of these super high-grade unconformity-associated style uranium deposits in the Athabasca Basin. And, of course, now my pegmatite collection, the ones that have dragged down my index. Brunswick Exploration, I last talked about on April 26th when they published the first winter drill results for the Mirage project. They have since published another batch. That didn't do anything for the market. The remaining batch we should get later this year, in June. And there's some key holes in there, but if these do not deliver much, the Mirage project is going to require some serious additional work this summer to get people to start taking it seriously again. And part of the key will be finding the source of the 3-kilometer boulder train whose micaceous mineralogy is not like that of the mineralogy in the pegmatites that they have been drilling. So there is still a really big prize to be found somewhere, and they'll go in there and they'll have a dual program of further delineating the pegmatites that they do have, and then trying to find where did this boulder train come from, which is like 3 kilometers long, huge boulders, can't have traveled far. It's got to be somewhere underneath all that overburden there. And Winsome Resources, they just published an updated resource estimate, which increased the Adina resource by 33% without sacrificing grade. I last talked about them on April 5th when they did a deal to take a look at the Renard diamond mining site to see if ore trucked from the Adina area could be processed there. It's an existing mine infrastructure footprint, so it would mean permitting development of pegmatites in this area would take a lot less time. The market wasn't pleased with the resource estimate. The stock's come back off. It had gotten back to $1.30. It's had a little bit of a setback, but there is still a lot of drilling going on, and the bunch of projects that are in the area, this is going to be a district consolidation play down the road. And finally, Patriot Battery Metals, 2 important things happened. This 9-month MOU they had with Albemarle that gave them exclusive negotiating rights for downstream processing facilities. This was allowed to expire with any such deal done, probably because it was too soon to do anything like that. This opens it up for Patriot Battery Metals to deals with other potential downstream users and processors, but they also just did a $75 million financing at $14.45, and this is a charity flow through, so somebody else is buying it at a price that's sort of similar to the current market price of $7.50 to $8 a share. So they are more than cashed up to continue delineating the Corvette pegmatites, CV5, and the other ones within that trend. And while this is not going to go to $50, $100, we're still looking at eventually a buyout in the $10 to $20 range. Not sure if it will happen this year. Lithium carbonate still kind of in the dumpster between $6 and $7 a pound, and there's still an ongoing drumbeat about how electric vehicles are not ever going to really take off. And also there's even like talk now, nobody will ever need lithium pegmatite, which is a bit of a joke since Australia produces more than half of the world's lithium supply, and that all comes from hard rock pegmatite. So I'm hoping that these 3 lithium pegmatite companies will revive later this year and help the index up. But I'm pretty optimistic that all the others are going to do much better in the second half than they have done during the first 5 months this year.
John, thank you so much for the update.
You're welcome, Jim.
We've been talking with John Kaiser. I'm Jim Goddard. Comments made on Kaiser Watch are an expression of opinion only and should not be construed in any manner whatsoever as a recommendation to buy or sell any financial instrument at any time. Archived online at kaiserresearch.com.